Good morning, everybody. Friday today, Forex market. We're back to close the week. It's been an active week, interesting week, and I wanted to land here, New Zealand versus the US dollar, just to talk a little bit about what we had to endure during the last probably about a week, probably 10 days or so, and obviously give you the update as far as what we're gonna do from this point on, right? So about a week ago, we decided that it was time to pull the trigger and launch a bearish campaign, right? A short-term kind of bearish campaign. Thor 64.27. We were only, only aiming for about 150 pip. Now we decided to go for it, to take extra risk, because the official trigger had to be this mid-high key level, and I'm talking about this blue system here, right? So the level is 65.35, and we knew price was supposed to break through if we want to have a solid, as far as probability goes. If we wanted to have a solid move, like a high probability move, we needed to make sure price was breaking through that level, right? So even before it did that, we decided to get in because we felt confident about the bearish conviction here in general. I want to show you why, guys. Check this out. So price came up just recently, right? A few weeks ago, and it couldn't break 66.31 here, and then it started to turn back down. That was very suspicious, especially spiking that level twice. So we felt that price was probably on the short-term cycle was starting to trade sideways here before it was gonna lift off and basically resume the original upside trend. So it's basically a consolidation phase. That was the suspicious. So we went for it, right? But price did that. It landed right on that spot. This is remarkable. Take a look at this laser sharp precision. Just landed right on that spot, spiked it twice, and when we saw this, right, when we saw price spiking it and turning positive, we got out, virtually with no damage, right? And then of course price went up, and we felt that it's probably not destined to break down. It was just destined to break up, which is very suspicious. Usually, I mean, it's rare because usually you don't have a breakout so early on in a trading range, right? This is just this was supposed to be the third leg, right? So, but price came back in quite an interesting fashion. Check this out. Just spiked that 66.31 and crashed. That was such a strong sign. And when we saw that, we felt that it was like the New Zealand dollar was turning around, right? Turning upside, planning to break out, but then having a moment of regret, and just coming back down with such a unique fashion, spiking that top level and just crashing downwards. And we felt that that's our second opportunity probably to jump on this move, because it looks like it's going to happen. So price, as you can see, we pulled the trigger right here, right? Just yesterday, basically, right at the beginning of the day, price was actually starting the day pushing upwards slightly. So we got a good price as far as yesterday goes, right? The top of the range, and yesterday ended up quite nicely. Breaking below 65.42. That's a big key level here, guys, right? The black one belongs to a higher time frame system, but also 65.35, which was the official trigger. Check out the just take a look at the close here, right? Let's take a look at that. Here you go, 65.33. So very tight, right? I have to say very tight. However, take a look at what's going on today. And now I'm giving you that microscope vision, right? Just so you can see what's going on right here. I think it's important. I mean, we talked about the breakdown yesterday. Today, pushing up, starting the day on the upside. crossing over, but then take a look what's happening. It's bouncing back down. Obviously, that's a level that price action acknowledged as a strong support. It got broken and it switched to a strong resistance. I mean, strong, we have a question mark about that. We'll see. Hopefully it's a strong resistance, strong enough to, just to push price away in a way that it will just continue this downside move, which is pretty much what we expect. And then, of course, the next imminent support level is our target, 64.27, actually 64.28. We're rounding this up a little bit, and that's where we're gonna drop out, right? That's where we're gonna execute and pull out from this position. I actually believe that price could even push further beyond that point and engage with a 200-day moving average and take the previous low on the way, right? But the safest spot is 64.27, and that's going to be good enough for us. That's about it for this one, guys. New Zealand versus the US dollar looking pretty bearish right now. We'll have to come back and follow up on this one. See you in the next video. Take care.